Hello, and welcome to another episode of the Engineering Influence Podcast. Diana Olaire, ACEC National, and today's show is brought to you by The Market Edge, a new podcast series that was created by ACEC National members that participate in our new Market Intelligence Committee. Each episode will feature an industry expert addressing member-specific questions with a focus on market trends and economic insights aimed at empowering engineering firms to drive growth, adapt to change, and maintain their competitiveness. Today, we have with us two port planners and designers from member firm GHD, and we'll be talking about port design and the trends impacting that market. So a little bit about our speakers today. First, we have Victor Tirado for Maritime and Coastal, America's Market Sector Lead for GHD. He brings over 2 decades of experience in managing multidisciplinary teams across planning, engineering, and construction. He specializes in delivering complex multimodal transportation, as well as waterfront and marine projects ranging from substantial infrastructure endeavors to environmental remediation and coastal adaptation initiatives. Victor's project portfolio spans piers, wharves, bulkheads, dry docks, major navigation channels, wetland restorations, living shorelines, highway grade separation bridges, and more. He is also a distinguished 6-year veteran of the United States Navy, so thank you very much for your service. And we also have Michael Vanderbeek, Maritime and Coastal Planning Lead for North America for GHD. For the past 20 years, Michael has led and or contributed to port planning and development efforts for dozens of public port authorities, private terminal operators, cruise lines, sovereign wealth funds, and municipalities. He has worked throughout North America as well as in Europe, Asia, Australia, the Caribbean, and the Pacific Islands and Middle East on projects ranging from individual port master plans to transnational port investment strategies. As a former port executive, Michael specializes in conceptualizing new port infrastructure opportunities within the political, environmental, and community-driven context of waterfront development to help clients achieve win-win outcomes. Victor and Michael, thank you so much for joining us today.
Thank you, Dan.
Thanks for having us.
Thanks for having us.
Absolutely. I feel like I could give a chorus song now after I've done all those very specific words with several syllables. I could sing an opera, but thank you both for being here today. All right, so let's get into business here. I've got to walk us through, actually, I want you to help our members walk through some of the trends that are impacting the ports market, which is your bread and butter and where you guys live. So starting with the energy transition, because that's really important just to everyone. And so how is that impacting design elements within the port market? And what opportunities and challenges does this bring to the AEC industry?
Well, I can start and then let Victor fill in the gaps here. But I think energy is honestly the most important single issue right now in the port space. And there's a number of different parameters, I would say, where it's really impacting port development and operations as well. So, and the way I like to think of this is ports are not only, they've traditionally been considered international gateways for cargo, but now I think increasingly they're actually energy hubs as well because of the synergy of different, energy needs that ports now account for. So one of the major trends that we're seeing is the push to decarbonization and of operations. And what that means basically is you're moving from traditional fossil fuels to, primarily electrified operations. And that's putting a huge demand on the public utilities, on power generation, and a need for a lot of new infrastructure at ports. And so I think that's probably the primary area where we're seeing activity right now is new electrical infrastructure, and then including not just the transmission, but actually looking at things like microgrids and other ways to supplement the power that's available from the utility companies. So that's a very big one. Another one that's really important, I would say, is alternative fuels themselves. So when you get outside the decarbonization effort, you're looking from vessels to trucks, alternative fuels to replace diesel or other forms of fossil fuels. So methanol primarily, I would say, in the vessel space is seems to be promising, certainly LNG, but then also hydrogen. And I think between all of those things, when you're a planner like me and you're looking at port facilities, the question starts to become, how do you accommodate all of these energy needs while still, conducting the traditional operations of moving containers and moving cargo? So I think it's really kind of like a Jenga situation where you're really trying to figure out where things go in a limited amount of space. And increasingly the energy infrastructure is taking up some of that space, but for good reasons. And then the only other thing I would touch on is, there's a unique opportunity, I think, that is kind of on pause currently, but the offshore wind industry has really caused a lot of ports to want to pivot to being, not just containers, but actually looking at how do they accommodate that industry. And even though it's currently on pause because of the federal permitting issue, I think a lot of ports, particularly on the West Coast, are still trying to figure out how they can be part of that supply chain going forward. And that creates its own challenges because a lot of offshore wind infrastructure really does have to be custom built.
So in looking at your bio, I know you've got, transnational experience. And so are there any differences right now in the energy story versus what you're seeing globally and just here in North America?
I mean, a lot of the issues are the same. Where different ports are and maybe in their evolution process, depending on what country they're in, I would say matters. The big push a while ago had been toward automation. I think that's still of interest to people, but it's, it seems to have scaled back a bit and decarbonization has come to the forefront. So it's less about automating the facilities than it is about making them zero emission facilities in the US. Whereas I think automation is likely still something in the international space that will continue to evolve. So there's a little bit of a differentiation there. But other than that, I think it's basically everybody trying to get to zero emissions basically as fast as they can. And I don't know if maybe Victor has something to add there, but that's what I see.
Well, no, I was going to add that to that is, we're seeing definitely increases, especially on the vessel design, vessel construction, right? There's been a significant increase in orders out there for transitioning, shipping vessels from standard oil to alternative fuels. And so that's definitely pushing most of the industry around the world, actually, or most of the ports around the world to just kind of adapt to that. And I know there's been a significant influx of need for Southwest Asia, actually, for some of these alternative fuels, LNG and things like that. And the U.S. is ramping up every day their production of LNG. So there's definitely a dichotomy there that the whole world is shifting to that green world.
So I'm surprised you brought up offshore wind. And I was curious, and I've asked you this before, but I want our members to hear it too. I asked you before about administration priorities changing. And with the market you're in, it's very carbon intensive, and there's a large amount of emissions that come from the work that you all do. And within that market, are you seeing a pivot to fossil fuels and natural gas, or is it an all of the above answer?
Well, I'll take a first pass on this, and Michael, you can fill it in, but I think it's an all-inclusive, actually. It's definitely an all-inclusive shift. I mean, obviously, like you mentioned, Michael, California is still kind of pushing some of this wind energy stuff, but in general, I think our clients are seeing a shift, an overall shift, right? They're trying to figure out new ways to basically take over that gap that has been developed on the wind energy side. Michael, go ahead.
Yeah, I mean, there's been a very clear move away from offshore wind in the past 6 months due to the change in administration, but the demand for energy or the push for additional energy hasn't slowed down at all. In fact, it's accelerated. So I think offshore wind is sort of a unique set aside that I would consider not dead, but rather on pause until, maybe some of the issues are sorted out in terms of this administration's view of it. But no, I don't see alternative fuels going away. I think those are very much being accelerated. I think the push to decarbonization is still full speed ahead. It's just the offshore wind industry, for whatever reason, is sort of a unique set aside that's been paused, but everything else I think is moving forward very quickly.
Understood. Good intel there. Going to go on to our next question here. So what are the traditional funding mechanisms in the industry, and how has that changed? And what's good and bad about those changes?
Yeah, I'll start with this one as well, if that's okay, Victor. This is probably my favorite question because it's one that I think all ports are struggling with. And the way I like to think of this is the traditional development model for public port authorities usually was use their position as a public entity, as a government entity that can issue bonds, that can debt finance infrastructure to do that. So it's sort of a 3-step process. The first step would be identify what your market opportunity is, what your unique selling proposition is as an individual port, for example. Step 2 would be find a customer. And then step 3 is come to terms with that customer, and you, the public port authority, build infrastructure to meet their needs, and then either lease it to them if you're a landlord port and make your return on that investment over time from their lease payments, or if you're an operating port, just charge them for your services over time and make back your investment the same way. And I think what has really happened is a lot of ports have kind of hit the cap on their ability to issue new debt or to debt finance infrastructure. And this is, it's for complicated reasons, partly because they've already spent a lot of their debt capacity on previous projects, and partly because costs have accelerated so much in the past, let's say 10 years. It's just no longer possible for a lot of ports, unless they're extremely well, really strong from a cash flow and revenue perspective, to be able to go after new debt. They just don't have the ability to do that anymore, to finance projects that way anymore. And so I would say for the last 20 years or so, there's sort of been a migration away from that model to increasingly relying on federal and state funds as basically seed money for infrastructure projects. So the process kind of works like a port will put together a project description for a major infrastructure project that they want to build. They'll submit a grant application, and let's say it's $1 billion project and they get $100 million. Okay, well, that's $100 million is a significant amount of money, but it's still only 10% of that project total. But that $100 million allows them to attract matching funds from other public entities and then from the private sector eventually as well. And I know that this is a model that has worked relatively well over the past 20 years because public money has been available. And again, obviously there's no mystery about the political landscape having changed in the last 6 months. The federal side of that hasn't dried up, but it has changed. And I think increasingly public port authorities are going to have to look to new models for building infrastructure. And again, it's a complicated situation, but I think the private sector basically is going to have to step up and fill some of that gap that either state or federal governments were doing in the past. Certainly states will have to step up as well for their ports.
All right. So I got to ask, and I don't know what the answer is. I got to talk about tariffs. Is it impacting anything that you do? There's a lot of sentiment data about fears and how they think it's going to impact them, and people pricing things ahead of schedule or buying things ahead of schedule. Is this impacting the market anyway over there, other than maybe the pull ahead or of, imports on the rise? Anything else going on that might impact what you're doing?
Yeah, I can start with that because I've been looking at a few polls, and I can tell you that there was a lot of push early on when the tariffs news came out, and a lot of the shippers were getting ahead of things, trying to kind of stock warehouses and do things like that. I think on the back end, what we're seeing as a result is not necessarily a tremendous impact, but a shift, right? And this goes back to actually the China plus one era, right? And this I'm talking like several years back now, where we started diversifying our supply chain, right? Going from China to other countries in Southwest Asia, Turkey, and all those other places, and India. So I think that shift had already been started, which then is kind of, I guess, buffering a little bit of the impact on the tariffs. But again, I'm not an economist, right, by any means. But I think that's what we're seeing, is that the shift already started happening before. Supply chains are hard to shift quickly. So I don't think the tariffs per se did much, except for just kind of a rush at the head start, and things are starting to calm down at the back end. But again, I'm not an economist. That's just what I'm seeing on my comments.
Yeah, no, I would say this. Yeah, I would say the same thing. Echo that sentiment, Victor. That as a non-economist, I mean, most of what I see or hear is anecdotal. But my gut tells me, as someone who's been in the industry for 20 years, that the main issue, let's put it this way, the long-term impact of the tariffs, no one knows, because it's going to take years for that to really, materialize. No one really knows what the long-term impacts are. But in the short term, just like any other market, the supply chain, the international shipping industry, it doesn't like when it can't rely on supply chains or sourcing markets. So I would say it's the instability and the unpredictability that is actually the biggest challenge for the near term. Long term, one way or another, things will sort themselves out. things that now come from China, maybe they won't anymore. And I don't know if that's good or bad necessarily. It just is. But in the near term, I think it's people not understanding how to manage inventories that is really the biggest challenge.
Right.
Good feedback there. So I'm going to combine these next two into one. I'm going to talk about AI, right? So how do you see artificial intelligence impacting the ports market? And also in the same vein, how quickly are autonomous rail cars coming to the rail market?
Yeah, sure. I can't speak to the autonomous rail cars. I mean, I think that really depends. I probably prefer not to get into that issue terribly much, only because I think we all know that the Class 1 railroads have an operating model that has worked for them for centuries. And I don't know to what extent they're necessarily investing in that. But automation in general, autonomous vehicles in general, yes, I think there's certainly potential for that in the near to midterm. As far as locomotives go and long haul rail, not really sure. At the port level, yes. At short haul level, I think so. But long haul Class 1, not sure. And then I apologize. What was the second part of your question?
Any impacts on AI, aside from autonomous rail? Any other artificial intelligence impacting design?
I mean, that's also tough to say. That's one of those things that I think that people aren't really sure what the impact of AI is going to be. But I think there's general agreement that there will be an impact. And I think how that impact really manifests is very much to be determined. And again, I think this will vary greatly across what part of the supply chain you're talking about, and frankly also which country you're in, because just like I mentioned earlier about the internationally, automation is much more likely than in the United States because of our labor situation. I think the same sort of applies to AI. I think we have strong labor both on the West Coast and then on the East Coast in the Gulf and the ILWU and ILA. And I think their tolerance for that, their acceptance of some of those things is largely going to drive what gets deployed at the terminal level, because they're still a very critical part of the supply chain. And I think that's obviously very different in other countries where maybe they don't have as strong a union and they're able to deploy some of those things maybe more quickly or at a different level. So I think the jury's very much still out on what the impact of that is going to be. I just, again, to bring it back to the automation conversation, I think about 10 to 15 years ago, a lot of people would have said that by 2025, every single new terminal that gets built will be fully automated. And to date, there's only a handful. So I will just have to say, I'm not sure how it's going to impact it. There will be an impact, but what that impact is very much up in the air, I would say.
Yeah. I mean, I'm not to say that automation is not already happening, right? But to your point, Michael, there's a handful of terminals already automated. Long Beach or LA has one of them. So it's already happening. It's just, the AI piece is TBD.
Understood. We've got time for probably one more question. I wanted to ask about trends regarding surrounding real estate at ports. So any insight or trends that you can provide on commercial real estate or cold storage or anything else that is not directly, it's not the cranes, it's not the shipping containers, but that's surrounding, CRE, any trends that you're seeing there?
I would say, trends are challenging because it depends on where the cargo likes to move, if that makes sense, and what type of commodities get handled at different ports. Certain ports, cold storage is absolutely vital because they're handling a lot of perishables. So I know, there are ports in South Florida, for example, that handle a lot of that north-south perishable trade. And it's absolutely critical that they have cold storage. Same in ports like New Orleans, where they handle a lot of frozen poultry, those sorts of things. That infrastructure is critical. Other ports that don't handle those sorts of commodities, it's really not even on the radar. And it's very interesting to sort of contrast those things. And it's not as simple as if you are let's say you're a port in a market that doesn't handle refrigerated cargo or perishables currently. If you build a large refrigerated warehouse speculatively, will it attract cargo? I don't think so. I think it's much more complicated than that. Could it facilitate the cargo being secured for that port? Perhaps, if the other dynamics work. But really, it's all about the all-in costs of delivering that cargo. And then also, is that really where the cargo wants to go? So I know that's not a very good answer in terms of trends, but I think it's very market specific. The one thing I will say is that from a general perspective, ports, the primary value of ports is their waterfront access. The fact that a vessel can tie up and offload cargo or load cargo. That's their primary purpose, right? Is loading and unloading cargo off of a vessel. Second to that is backland space. The real estate that they actually have to serve that cargo. And it used to be marine terminals were good enough. But now I think, certainly in the larger gateways like LA Long Beach, for example, or Savannah, that upland real estate for precisely what you're saying, for the logistics activity, for long haul distribution or for regional distribution is increasingly important. And I think, that's not going to change anytime soon. Having the access to the logistics infrastructure is still very important.
Victor, anything you want to add to that?
No, I think Michael just covered it all. It's really,
All right,
it's very much regional or, case by case and market by market for sure. But yeah, that's it.
Understood. So that's about all the time we have for today, unfortunately. I will say to our listeners, please be on the lookout for our next podcast from the Market Edge coming soon. Don't forget to like and subscribe ACEC's Engineering Influence podcast and YouTube channel. Victor and Michael, thank you so much for joining us today. And thank you for joining the Market Edge. See you next time.
Thank you very much. I hear you here.